This is Business Weekend with Ross Greenwood.
Hi and welcome to Business Weekend. I'm Ross Greenwood. It's great to have your company. Coming up on the program today, full budget coverage, including the shock of soaring energy prices, the risk of higher inflation and a slowing economy. We'll hear from Industry Minister Ed Husic, Shadow Treasurer Angus Taylor and one of Australia's leading economists, Chris Richardson.
Contracts with other countries, overseas customers will be honoured.
So, with the economy slowing, what's the environment like for banks and those who borrow from them? ANZ Chief Executive Shane Elliott is on the program and he's astonishingly upbeat about its prospects.
Australians and New Zealanders have never been wealthier, they've never been more liquid, they've never been more employed. They're sitting on a lot of savings, they're sitting on a lot of buffers.
And Qantas Chief Executive Alan Joyce was in Canberra this week, pushing hard to prevent its rival Qatar Airways from doubling the number of flights it makes to Australia. So today, we head to Doha for an exclusive interview with Qatar Airways Chief Executive, His Excellency Akbar Al Barker. So all of that and plenty more coming up here on Business Weekend. But let's start our coverage of this week's budget. One clue to its success or its influence was that financial markets barely moved on its release. And that's because it didn't immediately add to inflation with profligate spending. So what did it do? Ingrid Willinge wraps it up.
The first budget for the government, and it's under pressure before it's even begun. A self-described restrained budget, one that needed to resist any excess handouts as inflation continues to be the major risk for the country.
Inflation is public enemy number one. Inflation is the dragon we need to slay. And we did it in this way, not to appear tough, not just to win kudos with the econocrats or the markets or the commentariat, but because we knew that doing any different would be doing damage to the people that we are here to serve.
Within 24 hours of the release of the budget, a new blow, a shock surge in inflation, more pressure on the government and the RBA. The economic forecasts now look to fall short, or at least closer to, the government's worst-case scenario.
What we saw in the inflation number today was, unfortunately, the front end of some of these pressures on electricity prices that you're right to refer to. A bigger and bigger part of our inflation challenge will be a combination of higher electricity prices and the impacts of natural disasters on grocery prices as well. And that number that we got today is 7.3%. A substantial part of that is electricity, and we understand that.
So what next? There are some solutions laid out, but these are at least a few years away. And the problem is now.
We can't commence the conversation in 2023 on how to solve the gas price problem. We have to start the conversation immediately so that it comes into effect in the beginning of 2023. Unless we get the settings right, what is going to happen is we'll have a handful of multinational gas companies making extraordinary profits whilst we see the doors close on very good manufacturing businesses in this country, leaving tens of thousands, if not hundreds of thousands of workers out of work.
And it could get even worse, with expectations of a 50% increase in power bills over the next 2 years.
We see that for electricity prices, which rose 3.2% in the quarter, if we stripped away those kind of household rebates in WA and other jurisdictions, we actually would have had 15.6% electricity price increases, which is really significant.
The government does say it is considering other remedies, but no concrete ideas have been set out.
We would, as the Treasurer said yesterday, be prepared to look at measures that are beyond what governments have normally considered because of the extraordinary circumstances which we're seeing.
I think any responsible government facing these kinds of price hikes for electricity and for gas needs to consider a broader suite of regulatory interventions than they might have considered in years gone by.
But can monetary policy combat the problem? The big four bank economists all hiking their view on rates. CBA and ANZ still see a 25 basis point rise next week, but have now penciled in an extra hike before Christmas. And Westpac upping its forecast to a 50 basis point hike.
The facts have changed. They've changed extraordinarily. That inflation number yesterday showed us that inflation is much more entrenched, much more widely distributed through the economy than we're expecting. And I'm sure that if the Reserve Bank had been aware of that number last month, they would have done 50.
And with that in mind, the next Reserve Bank meeting on Melbourne Cup Day now very much in play.
Well, the shock in the federal budget, without doubt, is the forecast of a more than 50% rise in energy prices, and notably gas, in the next 2 years. This not only puts enormous pressure on households, on inflation and interest rates, but also on business, from large foundries and smelters to your local chicken shop. Well, this week, I caught up with Industry Minister Ed Husic and asked him if he's worried for the future of his constituents, the industries and businesses of Australia.
I've been concerned about the direction of gas prices for quite some time. As becoming Minister for Industry, it became clear that if we were going to do what we said we would do through the course of the election, which was to revitalise manufacturing, and the public gave us a tick and elected us to get that going, that energy prices would be one of those things that would be led in our saddlebags. I've been saying for quite some time that the greed of the gas companies has gone on. It's got to be checked. We've got to find a way to moderate prices, and there's an expectation, Ross, understandable, common sense expectation in the minds of the Australian public that if we're blessed with so much of this Australian resource in gas, that we should be able to access it in a way that doesn't go above export prices, that is much more competitively priced and ensures that we can, see manufacturers and households get a reasonable price for the gas that they use.
But Ed, look, let's be really blunt about this. The gas trigger so far doesn't seem to have worked. The gas companies have clearly prioritised exports, and they've had the right to do so. So is more needed to be done to ensure that industry doesn't either go broke or just leave Australia and go overseas?
That is my big concern, is that you've got one part of the economy, the gas producers, pricing in a way that's putting pressure on other parts of the economy, notably manufacturers, and obviously that is also felt by households as well, and that you just can't have that happen on a consistent basis. I mean, there are reports, and the ACCC in its report that it delivered a few weeks ago indicated that manufacturers were feeling that pressure, and that would require us to look at a range of options to ease that pressure, and that's what we're actively looking at now as a government, about how to get a fairer approach in the way that contracts, in particular for gas, are framed, that much more reasonable pricing flows through. We understand that the gas companies themselves have to cover their cost of production and generate a reasonable rate of return, but I don't think you can, based on what you're seeing in the behaviour of prices, believe that that is a reasonable rate of return, and we've got to fight for better, frankly.
So do you think there's a sovereign risk if you suddenly renege on a deal with those gas companies? They invested tens of billions of dollars into Australia, after all.
Let me make sorry, I feel really strongly on this point, Ross, and sorry, I didn't mean to interrupt you, mate, but the fact is this: contracts with other countries, overseas customers, will be honoured 100%. One. Two, what we're talking about is our uncontracted amounts. Those are the very amounts that were tapped into, Ross, when the heads of agreement was signed a few weeks ago, that delivered 157 petajoules predicted for the coming year, and deal with the concern that the ACCC had that we'd have a shortfall of 56 petajoules, right? So two, that supply out of uncontracted gas, that will be delivered. So there is no sovereign risk at all, but there is an absolute national interest here in ensuring that the supply that we have secured, and the commitment that prices, there's no way in the world that we'd have prices go above export prices, and that was secured under the heads of agreement as well, that happened. Now, bear in mind, you had, Ross, the ACCC say that there were instances where gas producers were offering to local companies gas prices that were higher than what they would even get away with in the international market, and they were doing that deliberately to force people to not accept gas because they just simply couldn't afford to pay gas at those ridiculous artificial prices. And it's that type of poor behaviour by gas producers that we need to clamp down on, and that's why we put that limit in the heads of agreement to say that they could not offer prices higher than export.
Because to me, it makes absolutely no sense if Australia, with so much energy, can't afford to make bricks, can't afford to make, aluminium, can't afford to have foundries. These are the basics of the economy, Ed, and there's a sovereign risk if we can't be self-sufficient in those vital areas.
And that is an absolute sovereign risk that we've been concerned about, and we've said, Ross, that we wanted, as coming out of the pandemic, we learnt, and when we saw that the things that we needed weren't there at the time we needed them most, that we needed to have a rethink. And that's why, for example, we're putting forward this $15 billion National Reconstruction Fund to build capability across a range of sectors to deal with just that. But I've said privately to the gas companies, and now I'm saying it publicly, that their pricing is working against our national interest when we're trying to do what I said a few moments ago, which is build capability in key areas, with manufacturing capability in particular being put under huge pressure by outrageous behaviour that we have seen and by pricing that is clearly out of step and does go way beyond covering their cost of production or a reasonable rate of return.
But it's not just gas and energy prices that industry confronts right now. It's changing industrial relations laws. It's the fact that there are skills shortages and potentially higher wages. There's also higher interest rates. So all of this makes industry less competitive.
Well, I think at the moment you're seeing, Ross, wages increase because there aren't enough people around. We haven't got enough skilled people around, and the ones that are around are able to command a much better outcome on wage offers. And you've seen and you've picked up and you've heard from businesses, no doubt, them going out to market multiple times trying to find people and having to go out to market with a higher wage offering than what they have before. So we've recognised that as an issue, and that's why, for example, through the Jobs and Skills Summit, we looked at what can we do not only in skilling up more people to be available for businesses in the way that they need, but what do we need to do to bring in labour as well to meet those shortfalls so that we don't see that type of pressure, wage pressure, being put on businesses. But at the same time too, mate, there are some people that have been low-paid workers who are at the front line during the lockdowns we experienced during COVID that, you know, I think they rightly, and I think most Australians, and particularly low-paid Australians, reckon that they're due a pay increase that they've been denied for too long because the previous government had as a design feature low wages, and that's just not sustainable.
So does the potential of higher inflation and higher interest rates worry you? I mean, the budget indicates an increase in unemployment from 3.5% to 4.5%. So that's some 150,000 people who won't have a job and will struggle to pay a mortgage. And that goes back to industry and the incentive they have to hire people.
I guess a number of things in answering that question, Ross. Well, I mean, we did, and the Treasurer outlined the expectation around the peaking of inflation, which would be expected later in the year, and that it would moderate over the course of next year. That is really important. Seeing inflation, we cannot afford for that inflation zombie to be roaming around the landscape. It sort of punched its way out of the crypt. We hadn't had to experience low inflation or high inflation for years now, for decades almost. And so it is important for industry to have low inflation because of its distortionary impact on the broader economy. It's why, for example, at a point where you've got the RBA acting in the way that they are, lifting rates in the way that you reflected in your question, we can't see that go on for too long. But we can't have the Reserve Bank act in a way, one way, and then government spend act in a way that's counter to it. So it's why we've been called on as ministers to look at where we can trim back spending, and we have done a big job in cutting spending and cutting the size of the deficit and returning the revenue uplift to the budget in a way that would be responsible fiscally so that it's running in tandem with what you're seeing with the Reserve Bank doing. So, and this is all focused, and I certainly cut in my space, Ross, quite a bit of money out of my department because, again, industry wants us to beat inflation, not have that roaming around the countryside as it's threatening to do. And if we get that right, then we're much better economically in a stronger position.
Ed Husick, Industry Minister, it's always good to chat to you. Many thanks for your time today.
I appreciate yours. Thanks, Ross.
The budget this week achieved one of its principal aims. It was not perceived as being inflationary, which would have spooked markets and triggered calls for even higher interest rates. But future government spending, deficits and rising debt seems inevitable as the government has to fund programs that includes the NDIS and also for big upgrades to military hardware. So where does that money come from and how will it affect the economy into the future? Joining me, one of Australia's most respected economists, Dr. Chris Richardson. Chris, is it fair to say, I know you've had a couple of days now to look at the budget and what it said, is it fair to say that the real challenges for this government are now in front of it?
Absolutely. In the handful of months since the election, the government's own actuaries have been looking at the costings for the NDIS. And they've said into the future it now looks a lot more expensive than it did only a matter of months ago. There have been a series of upgrades to those costs. This is the largest. And as a result, if you compare what we learnt on Tuesday night with the matching budget 6 months earlier, the government's assessment of the ongoing hole in the budget has gone from around 20 billion a year to about 50 billion a year. That's much bigger bucks.
OK, so where does the money come to cover that, or does it not cover it? The government simply ends up in deficit, racks up even more debt into the future, which makes it less capable of being able to handle any significant economic downturn if that comes.
And that last point of yours is entirely right. So why do we fight for a stronger budget position over time? It's not for the day-to-day, it's for the crisis. And you think global financial crisis under Labor, COVID crisis under the Coalition, both were able to use the relatively strong budget position compared to other nations to help defend Australia and Australians. There will be a future crisis. We need a stronger budget into the future. You don't need it overnight, but the politics of crisis fighting are much better when you start from that stronger position. How do we do it? Answer, it's not solely a question in and around NDIS. You need to look at all spending and all taxes.
So that means the government confronts a dilemma in the future. It's either got to spend, or rather cut spending significantly at some point, which might not be politically popular, or indeed it raises taxes, again, not politically popular, or it could scrap stage 3 tax cuts, take them to the next election perhaps as one option there. So it's got to make a hard decision at some point that will perhaps erode its political popularity.
It does, and so the economics are difficult. The politics are more difficult, basically, because budget repair is a chronic problem, and Australia's politics and politicians aren't good at addressing chronic problems. And the particular risk points at the moment, you look at NDIS, at its core, this is a magnificent program with a magnificent and noble aim of taking care of Australia's disabled. We absolutely need to do that, but we also absolutely need to take care of Australia's taxpayers. And these updated numbers suggest that there is a growing collision there. And both sides, the disabled on the one hand and taxpayers on the other, have every right to be grumpy with how things are going. Or in other words, if the politics are usually difficult, this time they are likely to be particularly difficult.
So is this the time when genuine tax reform, if Jim Chalmers really has that as an aim as a Treasurer, if this government has that as an aim, that the May budget might be the time that they really have to make some big calls to try and change the tax base and potentially to try and bring more taxes in?
That would be wonderful to see. I'm less convinced that we will see peace and love and excellent reform in the May budget, again, because the politics are difficult and because the May budget is another 7 months closer to the election and Australia has relatively short election cycles, which means we don't have particularly brave governments from either side. There are things, just as the things we need to look at on the spending front, there are things we need to look at on the tax front. The reform agenda is well known. I would point to two things that I would see as particularly urgent. It wasn't just the NDIS that Treasury and the Treasurer talked a lot about on Budget Night. It was gas prices. And again, the near-term risks around what gas prices might do aren't particularly driven by tax, but tax needs to be part of that conversation too. Brief recap. We are seeing rapid increases in gas prices. Gas is the marginal provider to the electricity system, so it's driving electricity prices, which are rising hugely. That is a big part of inflation in Australia, which is a big part of interest rates not merely rising, but on this view, essentially hanging around at those higher levels for longer, which is part of the reason why we've got a slowdown, which is a key reason why Treasury says the ranks of the unemployed will grow by 150,000 and do that fairly fast. So you want to do better on gas prices and you want to do that fast. That's mostly a discussion around the domestic trigger, where I think rather more needs to be done and quite urgently. But the tax side of gas has been a long-standing fail in Australia. And the other thing is, you've already mentioned stage 3. You wouldn't throw it out. The government clearly doesn't see any good reason to throw it out. But it is so big that you would probably be looking at trimming it somewhat.
Okay, so then we get to the point that even if you go out 18 months from now, almost 2 years, that's the period at which in the government's worst case scenario, Treasury's worst case scenario, that really the Australian economy could teeter. That's when it goes closest to recession at that time, and also the time when the world is at it. How prepared is the government, is the Australian economy for that slowdown in the economy right now?
We are better prepared than many other nations. We are less well prepared than we used to be. I mentioned before, you rebuild a budget because it can help you fight during a crisis. The politics are easier, and to some extent the economics too. Well, we haven't done that rebuilding yet. Whereas, for example, you look at somewhere like Norway, another energy superpower like Australia, has seen its effective budget position notably improve because of the different way it taxes its resource riches. To be fair, the Reserve Bank has built a buffer, and if we are in real trouble, it can turn around and cut rates again, and that would help and make a difference. And because even if you had peace tomorrow in Ukraine, and you almost certainly won't, my suspicion will be that the world will keep paying higher energy prices for a while, and certainly longer than, Treasury has assumed that in 5 months, today's thermal coal price will be about a sixth or a seventh of what it is today. It won't happen even if you have peace. Russia has proved itself such an untrustworthy trading partner on the energy front. For the Germans, for Europe in general, for others, the world will be scrambling for every other energy source that's going to underpin prices for some of the things that Australia sells to the world, I would say, for a while longer.
I'll tell you what, Chris, always good to get your input, and certainly in the wake of this budget, but the challenges are ahead of the government, there's no doubt. Many thanks for your time today.
Many, many thanks.
Opposition leader Peter Dutton this week unveiled his own strategy, including allowing young home buyers to access their super to top up their mortgage deposits. Also, the investigation of small modular nuclear reactors as part of the transition to renewable energy, and also his commitments to the stage 3 tax cuts. But the man who might have to work out if all that's affordable is Angus Taylor, who is the Shadow Treasurer and who joins me now. Angus, it's always good to chat to you. In regards to your role as the former Energy Minister, one thing, do we have to cut slack to this government? If energy prices are to rise 50% over the next 2 years, they're only a new government. Surely this rests back on your government and your role in that position.
Well, it's 56% they're forecasting right now, 2 years. And we've just heard from estimates that this is an independent analysis of Labor's policies. So, but the important point here is that they made this commitment before the election. It was unambiguous, Ross. There were no footnotes, there were no asterisks. It was an unambiguous commitment. And
so that commitment was that energy prices would come down under the Labor government.
$275.
Yeah.
And now in their own budget papers, they're saying it's going to go up. Electricity prices are going up.
Was it always inevitable that electricity prices, gas prices were going up under the way in which the mechanism currently works?
Well, you know, the point I would make is that their modelling didn't cut the mustard in the first place. It had all sorts of bizarre things going on, and a number of economists made that point at the time. But they did it for political reasons. Now they want to run away from it because they're actually finding that their own policies are not going to get the outcome required. I mean, we always understood that during the transition, gas is phenomenally important. You've got to get more gas into the system. Longer term, baseload power like nuclear, we want a serious investigation and look at how we could build that into our system.
So you think that's actually still something Australia should do, investigate that nuclear option?
Absolutely. But shorter term, you've got to have the gas. It's a flexible fuel, it's dispatchable, you can use it in industry, and we have lots of it. You've got to make sure that enough gas is getting into your domestic network.
Yes.
And that means you've got to help the gas producers to get more out of the ground.
You've got to help the pipeline authorities as well.
100%. You've got to help the pipeline. And I noticed that in the budget they've actually abolished a number of projects that are helping with gas storage and gas pipelines. And you can't afford to demonise the gas industry.
Okay,
they are part of the solution.
But on that subject, of course, there are sovereign obligations. Having invested tens of billions of dollars in Australia, they have a sovereign obligation to other nations to provide gas to them as well.
Yes.
Now, we're talking here uncontracted gas that is now being sold overseas that otherwise would be redirected to Australia. So is something significant, does that need to happen from government right now to ensure that that gas does come into the local market?
Well, if you're constantly helping the gas producers to get gas from out under the ground into their markets through pipes and so on, then you don't have this problem. I mean, that's the whole point. The real problem that Labor's got is they don't believe in the gas industry. I mean, Chris Bowen calls the gas industry fraud and BS. He's been happy to demonise them time and time again, as have many other members of the Labor Party. Not everyone. There's obviously deep divisions within the Labor Party on this. But ultimately, the demonisation of gas means they're not going to get the solution they need.
OK, but as the alternative treasurer, you know that gas and the electricity at affordable prices is necessary for industry. We spoke to Ed Husick about that. He's of the same view. Yep. But the reality is that Australia's economy does start to teeter if it can't get that cheap energy. That's the key.
It's exactly right. And you know, the reason gas is so important is it's not just used for electricity, and it is used for electricity, of course, when the renewables aren't available. You know, record levels of investment in renewables we've had for many years now. And yet, at the same time, when the renewables aren't available, you've got to have a flexible, dispatchable source of energy. It's also used in industry. I mean, the food we eat every day is only made possible because of fertiliser. And that fertiliser is made from natural gas. So, you know, that's one of many industrial applications for gas. That's why it's so crucial. And we're seeing in Europe a real live experiment of what happens when a country loses control of its gas supplies. It's a disaster. So this is where we think Labor's got it wrong. Well, I think they've had it wrong for a long time. Sadly, Australians are paying the price and will pay a very hefty price in the coming years, given the forecast we've seen in the budget.
OK, with the forecast from the budget and with the energy prices, there's obviously a worst-case scenario that says Australia's economy dips in late 2023, early 2024. If things go badly wrong, does that mean Australia, do you believe, is headed for recession?
Well, I don't know. I'm not going to attempt to forecast that. I'll leave that to the economic forecasters, Ross. What I would say is there's no doubt there are storm clouds, internationally in particular, despite the extraordinary strength we've seen in the Australian economy in recent years. But there's also no doubt that government can do things to reduce the risk of that happening. Taking the pressure off the Reserve Bank, making sure you've got sensible fiscal policy. We were disappointed that there's an extra $115 billion of spending in this budget over the next 4 years versus March. $115 billion is a big number. And that the underlying cash balance, the deficits, forecast over the next few years to go up from 32, a much lower number than anyone expected a short while ago, up to 51. So the deficit's increasing in the next few years, despite the strength of what Labor inherited.
Okay, but then there's also the situation that, you won the election, you'd have faced the same thing. The NDIS, the increased spending on military hardware. These are things that Australia has to do. It can't really get out of those obligations. So there is spending that needs to come into the future. The question is how you pay for it, whether you cut, whether you try and grow the economy faster, which you can't while there's inflation around the place. So it doesn't matter which side of politics it is, you'd still face the same dilemma.
Well, yes, that's true, but we faced that same dilemma. So if you go from, we'll exclude the pandemic for a moment because they were unusual years, but from 2013 to 2019, those 6 years, we were dealing with those spending pressures. We were seeing rapid growth of the NDIS. We were getting defence spending up to 2% of GDP, which was our goal. So all of those pressures were there, and yet we managed to ensure that we achieved the critical formula or critical outcome, which is for the economy to grow faster than your spending. Doesn't mean you have to cut spending, just means it has to grow slower than your overall economy. Two ways to do that: get your economy growing faster. Over time, tax cuts are the best possible way to give an incentive for people to get out there and have a crack, take a risk, invest, build their careers, build their businesses. That's why we're so focused on the stage three tax cuts. And it's that focus on making sure you've got strong growth is the key. At the same time, ensuring not that you slash and burn spending, you just got to make sure spending is slower than your overall growth. And we achieved it, Ross.
Your side of politics has always said that this government would never, despite having supported them before the election, never bring the stage 3 tax cuts. It would seem to me now if they want to change, they could throw them out 1 year beyond the next election and then go to the election with potentially a new tax plan. Do you imagine that's the way it will work?
I don't know where they want to go in tax. What I do know is if you read the budget documents, you wouldn't know that there's stage 3 tax cuts legislated right now. So they don't seem interested in them. Labor doesn't like tax cuts because it means less money for the government and more money in people's pockets, and that's never been their vision.
Always good to chat to you. Many thanks for your time here on the program today.
Good on you. Thanks, Ross.
Well, coming up after the break, Qantas is lobbying the government hard to prevent Qatar Airways doubling the number of flights it makes to Australia each week. Up next, we speak exclusively with Qatar's Chief Executive, His Excellency Akbar El-Barka. Thanks for being with us here on Business Weekend. The airline industry post-COVID is characterised by deteriorating service, long queues at airports and extraordinarily high prices. But at the heart of the problem, for travellers at least, is a lack of seat capacity and competition between airlines. In Australia, Business Weekend understands Qantas has 20 aircraft on standby as a contingency in case there's another COVID outbreak. Coincidentally, one of its chief rivals, Qatar Airways, wants to double its current flights into Australia. That's 21 flights a week. And that's being fiercely opposed by Qantas, as were revealed exclusively on Sky News earlier this week. To get to the heart of this corporate battle, let's go to Doha and speak with the Chief Executive of Qatar Airways, His Excellency Akbar El-Barka. Akbar, many thanks for your time. Can I just start by asking, have you applied to the Australian government formally to try and get these extra 21 flights?
Yes, Ross, we have. And we are waiting to have bilateral air services negotiations with the Government of Australia.
So in that regard, if you did get those flights, where would they go to? Would they be adding on to existing routes, or would you try and bring new routes on as well?
Yes, as a matter of fact, our air services agreement only allows us to go to 3 main gateways in Australia, which is Perth, Sydney and Melbourne. We also operate to Adelaide, and we had added the Brisbane during the pandemic. We would like to serve additional frequencies to the same gateways, and of course look at opportunities that we will get to other cities in Australia to connect the Australian people to the very large network of Qatar Airways.
OK, so Qantas argues that if a state-sponsored airline such as Qatar was allowed to expand its services into Australia, that this could risk Australian jobs. How do you respond to that?
No, it's quite the contrary. First and foremost, let me put the record straight. We connected Australian people to the world during the most difficult period in aviation history. We continued uninterrupted at the peak of the COVID, serving the three main points in Australia, which is Sydney, Perth, and Melbourne. We also added, during the pandemic, Brisbane to the network. We kept Australian people connected. We made sure that at huge losses, that we continue serving the Australian people and the Australian trade during this difficult period. What is interesting to know that we, the largest operator in Australia, as a matter of fact, completely stopped operating out of Australia, whilst we, at huge losses, continued. In April of 2020, we carried 36% of all the arrivals into Australia. We, as a matter of carried 1 in every 5 Australians into Australia. So you can see our commitment to Australia. What is happening at the moment and why we are being stifled from getting additional rights into Australia is the largest operator in Australia has cut its flight to 50% of pre-COVID level, more than double the price of the fares to the Australian people in the benefit of the shareholders. In addition, getting billions of dollars of state aid during the pandemic period in 20 and 21, and at the same time, even their large international partner has also cut flights to only 50% to pre-COVID levels, whilst we are offering an alternative to the Australian people, who we always like to serve, and to make sure that they are well connected internationally. We have done a lot of other things for Australia. We did repatriation flights. We carried Australians back to home, and vice versa, carried the stranded people in Australia back to their homes. With the charter flights to India to bring Australians back, with the charter flights to Kabul, risking our crew and our aircraft to repatriate people from Afghanistan. We have done a lot. We were the only airline that did major charter flights during the Australia Open in 2021. So you can see how committed we are. We are always there for people in good times and in bad times. We don't walk away. And the reason we are being challenged to get additional traffic rights so that they can put prices at high, reduce capacity, and really take the passengers with their fares to cleaners.
Okay, can I ask you, would you give assurances that fares would come down to travellers if you were given this extra capacity?
Our fares are already very reasonable. What we don't want to do is to increase fares to levels that will make Australians unaffordable to travel outside Australia and bring large tourists into Australia that in such a high demand as a destination.
So do you imagine, because I know, say, for example, you've done a deal with Virgin in Australia. You've been previously part of the One World Alliance, which included Qantas. You've now included Virgin into your thing. Do you imagine that this might have also added to some of the friction between Qantas and Qatar Airways?
Look, I don't want to get involved into politics between airlines in Australia. What is very important, Ross, for me to tell you is that as part of One World, Qantas should be working with us, not with other airlines, in the spirit of the alliance. However, as they are working with a competitor of mine, I have the full right to work with another airline in Australia to develop our relationship and to serve the Australian people and the people who are members and working together with Virgin Australia. Why should I not work with their competitor when they are ready to work with my competitor?
So the timing of this is interesting, given, of course, the World Cup in Qatar that's coming up. And, of course, many people are seeking to come to your country during this time. So do you think, again, the timing of this corresponds with that?
Well, we have been applying to the Australian authorities for a long time to get additional rights. And continuously, our application has been blocked. I hope this time the government in Australia realizes the commitment of Qatar Airways at difficult times. We had even opened a help desk to help diplomatic missions around the world during COVID, Australian diplomatic missions, in order to help the Australian people. We are very committed to people. We are not there just, with us, it's not a one-way street. We are there, and we will always be there, like we have proved ourselves. When everybody stopped to Australia, we were there.
OK, so were you disappointed this week about the Australian Socceroos speaking out about the human rights record of your country, given the fact that your airline and its reputation also corresponds with the reputation of your nation?
Look, let us not mix two things. First and foremost, Qatar has done so much in order to meet all the international requirements. And frankly speaking, these people who are acting against my country because they cannot accept that a small nation like Qatar has won the largest football tournament in the world. And I think all this being said against my country, the mudslinging against my country, is nothing more than just nonsense. International regulators, International Labour Organization, every single entity abroad have certified that Qatar has met all the requirements, and every country will have here and there certain issues, but we should not take it out of context.
Do you think those footballers had a right, given the fact they're going to be visitors to your country, had a right to speak in the way in which they did?
Australia is a democracy. Every single Australian is free to reflect their opinion, but the fact should be seen and judged, and we welcome the Australian football team here in Qatar. For themselves, they will see the sacrifices we have made, and we assure them that it will be an experience they have never had before anywhere else in the world.
One other issue, in October 2020, 5 women claimed that they were, without their consent, intimately examined by officials from Qatar, now suing your airline. Again, reputational issues are important for people visiting your country, people using your airline. How do you respond to that?
Ross, what happened was during tragic circumstances when there was an attempted murder of an infant. Unfortunately, I cannot get into it, as you just said that they are taking me to court. So I don't want to preempt any statement, and I will leave it, and I trust the Australian justice system, and we will have to wait to see this go through the courts in Australia if this is what is going to happen.
Your Excellency, many thanks for speaking with us today. I appreciate your time.
Thank you, Ross.
Coming up after the break, the ANZ Bank is staging a comeback in market share and profit. But with economic headwinds ahead, we ask its Chief Executive Shane Elliott if this is as good as it gets. Thanks for joining us here on Business Weekend. Well, after lagging its competitors in the home lending market, the ANZ Bank's cash annual profit out this week showed signs of life by jumping 5% to $6.4 billion. Rising interest rates are improving bank margins. Bad debts right now are at all-time lows. But with economic hurdles ahead, you do wonder if this is as good as it gets for the banks. And that's the question I put to the ANZ's Chief Executive, Shane Elliott.
No, not at all. So ANZ is in really good shape because of all the hard work we've done over the last 5 or 6 years, repositioning it and de-risking the business. And we're only really just getting into our strides. And we saw that in this result with all 4 of our business divisions really building momentum. It is not as good as it gets. It gets harder from here because we have to win market share. We have to get out there and really win customers across. So that's one. And 2, I think the environment, I know there's a lot of doom and gloom. I know a lot of people are worried, and I get all that. I still think the environment is quite supportive for banks and for ANZ, at least for the first half, and then we'll see from there.
I want to tackle you on that because, given where the economy is going, interest rates now higher, inflation also rising, energy prices becoming an issue, quite clearly for your business customers, for your household customers, there are significant costs ahead of them. And at some point, even the budget shows household savings ratios falling down closer to zero. Does that give you pause for thought?
Well, it always gives us pause for thought and where you have to be cautious and think about all those things. But look at the starting point. If you were designing a starting point, taking all those things into account, thinking about the global uncertainty, you would design what we have today. Australians and New Zealanders have never been wealthier. They've never been more liquid. They've never been more employed. They're sitting on a lot of savings, they're sitting on a lot of buffers, and the banks are sitting in really strong position from a capital and liquidity point of view, which says we're ready to sit in there behind and support our customers through what might be tough times for some as we go through the inevitable challenges that you talk about.
So the budget this week does not forecast a recession. Certainly most Australians do not believe a recession is coming. I just wonder whether there's complacency there, that maybe this might get a bit tougher, especially with these higher energy prices, before it really does turn around, interest rates start to fall, and as a result you get a new cycle coming.
Oh, I think we're a long way from a new cycle coming. I agree with you on that. But having said that, I don't know that people are complacent. Certainly not. That's not what we're seeing in our data. People have been prudent. Look what they did during COVID. They shored up their balance sheets. I mean, aggregate household net debt in Australia, so net of liquid assets, is at a 15-year low, right? So people have been behaving pretty prudently. And they don't do that because they're complacent. They do that, I think, because they're actually prudent and they are reading the tea leaves about what's going on. Now, I think it's not about the aggregate. It's not about the averages. It's about those that are more exposed to stress. And we think those tail risks are relatively modest. Now, again, not diminishing it for those that are going to face a bit of trouble. There is clearly going to be some deterioration. But from our perspective and all the data we see, we think those are relatively small cohorts across the economy.
OK, so then given what the bank went through and the banking industry went through in the Royal Commission, what does the bank learn from that as you go into tougher times and you do have that small cohort of people who might suffer stress as a result of having taken on debts late in this previous cycle?
Well, I think actually more importantly, so we absolutely learnt a lot through the Royal Commission about conduct and how we behave. Not just in times of trouble, but in general. And I know at ANZ we've really cleaned up our act on a lot of that. But we also learnt through COVID, and we invested heavily in things like data and analytics. We built our capacity to be able to find customers that were in stress because of COVID, and now we're able to use that same technology and that capability to really stay on top of data almost in real time to find out which of those customers that are doing it tough. We were seeing red flags so that we can get in there quickly, intervene and help and assist. And I think the banks, again, I think we did a good job during COVID showing we can do that. We can be empathetic. We can do the right thing by customers if we're on top of the situation and we get in early enough. And I'm pretty confident we've got those resources. All the people we built in terms of our hardship teams because of COVID, we've kept all them. They're great skilled people. We've kept them precisely for a time like this when things may get a little bit harder for some.
OK, so where do you think the stresses lie? It may not necessarily be in that household sector so long as jobs are kept, but even the budget suggests another 150,000 or so people will become unemployed. But it may be in the commercial sector because in many cases commercial properties are the ones that still are flagging as a result of the lockdowns and as a result of increasing numbers of people working from home.
I totally agree. So, a few points on this. There is going to be stress. We're coming from a very strong starting point, but nonetheless there will be stress. So where is it? Well, it's going to be in the same old-fashioned places it always is, where people have taken on too much leverage. So that'll be it. Liquidity challenges, where people do not have access to liquidity. And of course, what we're really testing this time, particularly in Australia, is all those business models that are just not set up for raising rates or an inflationary environment. And what I mean by that, does your business have pricing power? If your costs of production are going up, labour, energy, whatever it is, do you have the ability to pass that on to customers? And so we're going to find out, and we haven't been through a cycle like this for a long period of time. So I think there are some usual suspects of areas. Now, what gives me confidence at ANZ is I know we have been de-risking the bank for a long period of time. So we haven't been doing silly things. We haven't been extending leverage irresponsibly. We've been really clear about who our customers are and being really tight in terms of risk appetite. And our customers have been doing the same thing. So that doesn't mean there won't be stress, but I feel a lot better about going into this period of uncertainty than I have at any time in my banking career.
Shane Elliott, always good to chat to you. Many thanks for your time today.
Thank you.
So that's it for Business Weekend this Sunday. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but don't forget, you can keep up to date with all the latest business news with our daily program, Business Now, 4:30pm and 11:30pm Eastern Time. Plus, via our website, skynews.com.au, where you can also see a repeat of this program. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.